I can start with the history. I mean, I went to University of Colorado Boulder originally. I was actually on the ski team there. So
No
I went
kidding.
there to ski. Yeah, I was a freestyle skier, so I did moguls. And my freshman year had a blast, skied a ton. And my dad looked at me and said, "Hey, your grades aren't that sweet, and I'm paying a ton of money for school, and it seems like you're spending more trying to be an Olympian, and you're not even close to being on the Olympic team. So why don't you figure out a different place to land?" And so I left Colorado in like March, and I traveled down to U of A where I had a bunch of friends and just to visit, and got on campus there and was like, went to a party, and the weather was perfect. It was beautiful, and there was a lot of co-eds around, and I was like, this is a good spot. I think this might be a spot I could do well in. And so I ended up transferring down to University of Arizona and finishing off there and then coming home. So that was my story, my long Olympic quest of trying to be a high level skier that failed.
So
So
from snow to desert, and now Alkeme is sponsoring, and you have your the name of the company on their, not called, how you call it, on the
yeah, so
field.
we did a naming rights deal with the University of Arizona with the McKell Center that's there, which is a basketball arena. And so basically it's called McKell Center at Alkeme Arena now. And we've got, naming rights on that arena itself. You'll see our name when the basketball team plays on both baselines. So it's good visibility for the brand since we're a newer company, 5 years young. And, for our perspective, we're in the Big 12, and a lot of our proprietary members and partners are from the Big 12. And that's kind of a nice area for it to grow in. So it's easy for us to put our name on a court and for them to see it there and get that brand recognition. So we talk to other people, they already know who we are kind of from watching some of the hoop go on. So it's been an interesting one from, as you probably know, private equity back. They look at things differently from an ROI perspective, and how do you tag an ROI with a naming rights convention, and how does it work out? So let's just say we do a lot of reconnaissance behind the scenes when games are on, and we're constantly picking up on traction on the site and then diving in and re-hitting them and retargeting them while games are playing, and we've got a lot of business out of it so far. So it's been a good start to a longer relationship. So we're new to it, and it was nice to do it at home. We looked at a bunch of different venues, and to be able to do it there was special. But we would have put our name on anything that made sense at the time, to be honest with you, because we need to get that recognition out there, right? I mean, it's tough when you start. So
Well, you have a lot of insurance companies that basically bought or rented the naming rights of different stadiums, right? It's
correct.
Acrisure, Allianz, so many others that they have their name over there. Well, here we had
Big
Staples, now we have what is
carriers.
it?
I mean, you got to think about the carriers across the soccer uniforms. I mean, the patches are going to be
Yeah.
the next big thing. I mean, so yeah, I mean, it's part of the new world of branding, and it's you got to be bigger. The brand's got to carry bigger than you at times, and it's we started in Southern California on the West Coast and Arizona primarily originally, and we needed to expand across the United States, which we did. We're in 35 states now with physical locations. We've done over 85 transactions, bolt-on acquisitions. And so we've stretched all the way across the United States. And we go from Boston, Massachusetts, all the way to Honolulu, Hawaii. So we've spread the entire United States. The only thing that we don't have a piece of our hand on is something in Alaska, but that's a little hard to come by, candidly. So we'll figure that one out later.
I'm sure you will. Let's continue with the origin story. So you started with Venture Pacific, right? Then you had the broker with the double K, double R, which was more on the Legion. Now you have Alkeme. Usually the classic question will be, beside misspelling on purpose, which is the essence of marketing, so people remember you. What's the connective thread of it?
Yeah, so I'll tell you, Alkeme was kind of interesting. I did start with Venture Pacific. My dad was in insurance. Let's just get there. So that's like kind of how I got sucked into it. He had an agency. He built to about $11 million in top line revenue, sold it to his partner, and he retired at 52. And that was when I was in college. I came out of school and he's like, I'm bored. I don't like golf. I got as much as I thought I would. And none of my friends are retired. I'm going to start another agency, but I got to start it from scratch. Do you want to come along? I wanted to be an attorney. And candidly, he's like, listen, you don't even like to read that much. He's like, being an attorney is not a good job for you. He's like, just give it a shot for 2 years and we'll see what happens. And here we are, 30 years later now, I think it is. It started in 1998. We started Venture Pacific. It was a regional shop. We built it to about $5 million in top line revenue together, my dad and I. And then I bought the agency from him. And then I took it in a different direction. I grew it to about, just over 11 million. And then I was looking to say, how do I get to 22, $23 million in revenue, and it's hard. It's hard to scale up when you're on your own, and you got everything on your shoulders and you're doing production and you're doing everything. And so I started to talk to some of the other consolidators around the space and realized that they weren't my cup of tea. So not that they didn't run great businesses, because they do, but they thought about things differently. And the majority of them really weren't insurance people. They really are bankers and financial people that kind of are engineering results. And I wanted to be a true growth organization that focused on production and flipping it and then adding technology to the backside of it and driving everything off of data-informed decisions. And so we made a conscious decision when we started Alkeme, which is really a collaboration of 6 P&C shops and 1 wealth management shop together. And I said, we need to put everybody on one system, put everyone in one instance, and make sure that we're drafting all the data we can up into the system so that we can make informed decisions on how we want to grow the business organically at a high clip. This is 6 years ago, 7 years ago, before the market had shifted. Interest rates were still relatively zero. And, and multiples were low. And the thought of the day for consolidators was just buy anything and everything and stack EBITDA. And I never thought of that as a plan. I thought that that's like a loose collaboration of companies, or like I like to call it Hunger Games, where everybody's just kind of on their own. And, I represent District 2. I wanted to build a company and I wanted to build it from the ground up. So I really decided consciously in the beginning with the group of people that started with us to say, hey, look, we need to be in one spot, and then we need to continue to migrate everybody onto our platform so that we continue to make decisions off of that data. And, it goes back to just all the things that I've learned in this business, which is, the riches are in the niches. And, that's really where you need to be focused. I love the kids in the background, by the way. I had 2 of those, 21 and a 19-year-old. So it doesn't bother me one bit. But, when we came up with the name, we were originally going to be a company called Unify. That was our original name. And it was too close to this cluster that we were a part of. And so we're like, look, let's find something else. And someone mentioned Alkeme, and I looked it up. The definition was great as a seemingly magical transformation of taking, 6 metals and making them to a harder metal, a more formidable metal. And I'm like, well, that's really what we're doing. That encompasses us to the T. But I didn't like the traditional spelling of Alkeme. And so I looked over and I saw the phonetic spelling, and boom, there it was. And I was like, there it is. And I didn't have to pay anybody for it. It was free. Off to the races. So quick GoDaddy search for the URL. It was clean. Off to the races.
Done. Very simple. How many people were there? 7 at the beginning? 6, 8?
There were 6 PNC shops and then 1 wealth management firm. So we had 7 total that came in together. About 25 million in combined revenue as a unit. And that was in 2020. I mean, we really started in 2019 looking for a partner. Ended up landing on it in 2020, October 28th, which was really a weird time to come out into the marketplace, right? A lot of changes coming on. We had a political shift, obviously. We had COVID. We were in the middle of COVID. So it's a different time. I think we signed our documents, and I felt like you guys, especially in LA, I mean, Orange County is way different. I mean, we were kind of wide open still here. I mean, it looked like summer around here. People were going surfing and biking and running and doing all these things, and restaurants were open. And everyone else is like locked down.
Bad. Please continue.
No. I know it's terrible outside of where we're at. And so we said, get to work, start working on M&A, start trying to do deals, start doing what we do, protecting the client, making sure we're in front. And that's where we started. So since then, we've been able to grow to over 350 million in revenue, top line. And we're in 35 states now with physical locations. We got over 110 locations in total. And we continue a healthy diet of kind of building from an acquisitive side, which is, the not inorganic, and then really focusing on high organic growth to drive the inorganic activity. And then in the middle, controlling our cost spend by using technology and AI, since we're not heavily focused on trying to reintegrate a company that got away from us, which is where a lot of our competitors are at, unfortunately. We're able to focus our spend really on, hey, what are we going to do with AI and how are we going to optimize the future and how are we going to build the business to meet the future? And that's really something that I'm passionate about because I've got kids that are coming in and I see what AI is doing. It's like we had a chance, like you either lean back and freak out or you lean in. And so I'm like, hey guys, we got to lean in. This is revolutionary. This is going to change everything that we know about today. And so how do we look at it? How do we stick to our guns where we need to stick to our guns and keep it traditional, but also constantly adopt technology to make our lives easier so we can make the client's journey better, which is ultimately our goal, right? And so that's really where we're at.
So you managed to get 6 other folks to join you. And I'm kind of continue to hit that point because in the past few years, I shifted more and more to the investment side of life. So numbers, it makes sense. Great. Let's move forward. Dot the I's, cross the T's, dump a waterboard the J, whatever you want. So the biggest challenge going back when I was an entrepreneur is getting the founding team, or in this case, getting 6 people or 7 people to onboard and join you. So you had 6 different owners.
Seven and sometimes 2 at each agency. So so you can be 14.
How did it come together? What was your sell pitch? Is like, guys, you should follow me.
And basically, we sat down. I literally just had the conversation with the people and said, look, you guys have nice agencies and you're living a great lifestyle business. And we're watching people sell left and right around us and everyone's selling their businesses. And I said, there's a momentum shift that's happening and occurring, whether we like it or not. And you can choose to stay how you are. And that's totally a fine decision on your part, or we can take a risk and really change it from a lifestyle business to wealth creation and a generational wealth creation vehicle. And it was as simple as that. I'm like, and here's a model that can support exactly what I'm saying that we had built out. And we had some assumptions that were built in. And I'd like to say that we knocked it way past what we ever thought we could do in the first 5 years. But that was the shift. It was like, look, you're going to talk to someone. Do you want to go work at, insert a publicly traded company here or one of the consolidators over here? At some point, you're going to sell your business. That's what you build a business for. You don't build a business just because you think building a business is, some people build a business because it's cool, but most people build a business to create equity,
lifestyle.
To create value, to create a lifestyle, and then to sell it at some point. And the lifestyle side of the business is great in insurance. And it's like if you can live in that world where you're satisfied with what you're getting out of it and you're okay being 70 years old at some point and having everything on your shoulders and realizing now you're in a depreciating asset because you're not writing any new business because you don't have the energy to do it along with all the other 8 things that you're doing. That's okay. I mean, I don't begrudge anybody. If you want to be a serial entrepreneur, that's great too. I mean, the one thing I'll tell people is if you're going to do that, make sure you're taking the money you're earning in insurance and you're investing it somewhere else really smartly, getting into some outside investments that will make you that wealth, because you're not going to get super wealthy in insurance just being a transactional lifestyle guy. You're just not. And you know what? You can live a great life, and that's great. And that's fantastic. And it's not all about money at all. It's about changing. For me, it was about changing the perspective and the paradigm of what we were in. All I see is the same playbook being run time and time and time and time again, over and over and over. And it's like, I could probably blindly show you 12 companies that do the same exact thing that just have a different logo at the top of it, right? And, I call it the mahogany wave or the silver tsunami or whatever, but these are real things that have happened in our industry that no one seems to want to address, And so we set out to do something revolutionary, change it, and basically take the business in a different direction than even we knew. Where we're at today, I mean, the stuff we're doing today is mind-numbing, but who could have, I mean, you're in InsurTech, I mean, I would have never thought that we'd have the power of Claude and co-work at our disposal to do some of the stuff that we're able to do. our BI, our business intelligence units, what they're able to do, how they're able to develop. I mean, we're becoming not just insurance people, we're becoming many SaaS companies, like software development companies, quickly. And that's why you're seeing such pressure on that community right now. And there's going to continue to be pressure driving down on that. But
You're just
that's
repeat. You are just repeating all of my reports because we had a certain trend recently, right? I think it was what's his name, Matteo Carbone, that
Matteo Carbone. Yeah, he's a good
used
dude.
to say every insurance company is going to be InsurTech, and I will take it 2 steps forward. Every insurance or every InsurTech is going to be an AI company, not true AI, but they will know how to use AI where it needs to be. Not because today it's still tourism, trying to figure out. Most of the people do like a shadow IT or shadow AI, using it as they want, as they think. But the smaller organizations, they are like everything else. They can quickly adopt it and they know where they need it. The people know it's like, oh, I can use it here. Awesome, great, wonderful. And then you figure out how do you do that for the entire company. Well, you said that you did about 85 acquisitions. My research, needless to say, it wasn't apparently as correct. I kind of find like 70 different ones in
The
20.
interesting part is we don't announce every deal
I know
because
that
one of the things
again,
that you've got,
I
one
have
of the
public
things you've got,
information. That's it.
yeah, no, and the other problem that you've got is unfortunately, when you announce, it brings on people that try to do things that are unscrupulous towards those companies you buy a lot of times. So you'll see a lot of companies in our space, they will not announce their actual acquisitions until they feel they're secure, safe,
Mm-hmm.
um, and not vulnerable. Because as a smaller agency, your systems aren't the greatest. And so when we go in there and buy it, we got to shore it up from the backside to make sure that we are protecting our data so that we're not getting encroached upon from the outside. Cybersecurity threats are just off the charts. I mean,
Oh, that's a great topic to touch on as well.
yeah, I mean, it's unreal. I mean, so when you see what's going on behind the scenes and how they attack you, you got to be smart about how you handle your announcements too on the companies that you're buying. So, um, but
Oh,
again,
no. This is great. Actually, that's super interesting because I was going towards, the different acquisitions, and it's part of the ABC of business growth in insurance, and we see more and more the consolidation, and your competitors, the bigger ones, know how to do it very well. The good friends in Cordia, that now I completely forgot the original name, and a few of them were on my podcast or on a panels that I moderated in the past. Let's hold on that. I'm very curious. Tell me more about the cyber attacks. What's going on
yeah,
there?
I mean, no, I mean, it's just, I think insurance, right? I mean, so look, it's a highly acquisitive space. It's got dynamics and people's information inside of it. And so it's data driven, people want to get a hold of it. And I don't know, again, I think that if you're an insurance carrier, an insurance brokerage, you probably have a threat on your business at any given moment. And that's not an area that a smaller independent retail shop's going to put much effort into, is how do I
Mm-hmm.
protect my backside? How do I make sure there's no doors to enter my company, if you will, from a technological perspective? And as a bigger organization, you got to broaden your thinking out to how do I protect the back so I can protect the 1,500 people that work for us. And so that's been interesting to watch too, just coming from a smaller organization. Even though at $11 million, my shop was big, it's like top 1%, I think, in the nation at that size. Once you get above $11 million or $10 million in revenue,
Unbelievable. Yeah.
it's still one of those things, like systems are systems, right? And so I think you've got to be very smart about how you're doing it. And even as we evolve into, past the cyber threats, I mean, we've done a ton of work there. We've outsourced to a company called Bulletproof. They basically handle our backside. And they make sure that everything's, congruent as we go through, because we migrate and integrate as we go along, which means everybody becomes Alkeme. We don't let you stay ABC Insurance Brokerage. Everybody comes onto a common platform, and that's because that's how we're able to get the growth, right? That's how we're able to scale. And what we want to do is make sure that everybody's information's in the system so that we can make informed decisions from headquarters to actually drive growth, and drive growth for them. And so I think, as you think about technology and you think about all these things, the more that you do with AI, you've got to have AI governance and you got to bring in people to help you support your AI governance. How are you handling AI? You can't have people going ad hoc, just creating tools left and right that they want in their own time and then trying to develop them into the system. So we've solved for that, where we've got a business intelligence team where they actually tick it up what their idea is, and we can actually create it and send it back to them within like sometimes the same day. So we're actually solving the IP issue with them in real time to make sure that it's congruent with our AI governance and body, and that it's going in the direction we want it to go, as opposed for them to going ad hoc. And so you got to redo all your employee manuals. You got to redo everything that you think about, contracts. Everything has to be rethought about the business. And I don't think enough people think on that broad a scale about these things, candidly, between you and I. And I think that it gets out of control and then it becomes too big of a problem. And I think you saw that with some of the ones like Assured Partners and some of them that weren't integrated fully, where it became such an issue. Like, how do I reintegrate the company back
I
together?
love it.
How do I bring the company back together now that we've been operating separately? And not to pick on them, they built a great company. But the private equity guy said, I don't want to spend 2 years of my life trying to figure this out and then see if we can maybe take it public, maybe just instead sell it, and that's kind of what happened. So I think, we were kind of lucky because I'd say, starting in 2020 wasn't ideal, but it forced a lot of discipline and rigor into our thought process and where we were going with the company. And then being able to do stuff like this, where we were buying companies on Zoom,
Mhm.
that was not a today thing. That was it. I mean, they used to have to fly in and sit in an office with someone and get an eyeball test on them, right? And so I think just, embracing those types of changes, those are sea changes that are coming in, and you've got to actually embrace them instead of like shying back from them and being nervous about why is the world changing. I mean, you can go to Who Moved My Cheese, you can go to all these different things.
That's an old one.
That's an old one, but a great one. It's the easiest
Yes.
book in the world to read.
What was it, like
Still,
96, 97
about
maybe?
96, 97, I believe. But I mean, like, that's the simplest book to read that shows you that if you're not evolving your business, you are going to lose at some point. I just don't know when, but I can guarantee you will lose. And that's how I feel about AI right now. I think the people that aren't embracing AI and that don't understand how it can be thoughtfully deployed in their system, and in their ecosystem, I don't know what to tell you, but the future is going to be real tough.
Now, I'm smiling here because you kind of answered a few of my follow-up questions, which is great. And at the same time, I've been thinking about the same lines in terms of how do you manage small acquisitions, right? So my day job, right? And this is more about how do we make sure that we can actually support small acquisitions and provide the sales side a true service? Because for me, it's almost the same effort if it's a 10 million sell or 100 million sell. Actually, the bigger it is, the easier it is, because the buyers, it's a shorter list. And one of the challenges that with a certain company that gave a proposal recently, needless to say that I cannot get into too many details, it's all about the culture fit. And with that, it's not just because this is how they look at it. For that specific one, it's going to be very interesting. And oh man, I wish I could get more into details on it. That's awesome. But at the end of the day, it's more about what worked. How can you keep that company, or in your case, it's the brokerage, what made them good, and how you can make sure that your integration playbook doesn't break them, so they will keep on doing what they were good at, and now when they're on your platform, they will be even better. Can you share, I don't know, a page from your integration playbook, how it works?
Yeah, so you're absolutely right. I mean, you got to be careful. I mean, disruption's the devil at sometimes, and if you do too much disruption too quick, you could really hurt the system. But everybody that we engage with, we have a scorecard we kind of keep on the side, and we're basically inputting things, and we're looking at things like how adaptive are they? Are they adaptive to change? How are they growing? What's their niche? What's the difference about them? Why are they different? And why are they doing anything from a technological perspective that we can actually utilize something different? And how quickly do we think we can move them into our system? And so we build a bilateral agreement between us and anybody that wants to partner with us that basically we have each one of our departments goes in and basically does a one-on-one interview with the person that leads that team for them. If it's, HR, if it's IT, if it's accounting. And then we say, here's when these are the absolutes. Day one, we're taking over treasury. We're taking over, payroll. We're taking over banking. You will not ever see that again. It's gone. And then we make sure that they understand that. Then we're putting you into an integration roadmap, which means that they're going to tell you within 3 months, we're going to move you onto our system. With that's going to come training and all these things that go along. And so they're building it with us and they agree with us. And then we have a document that we actually sign together, which forms our roadmap. And so there's no unexpected change that they can't prepare for. And so our goal is to be augmentative, like really to come in and say, look, you're doing great things. We don't want to lose your culture and what you've done, but there are things that we have to do that are institutionalized. But beyond that, we want you still to operate like an entrepreneur. We want you to think like an entrepreneur for your business. We want to continue to grow your business. We want you to continue to grow your business, because if you're just sitting still, that's not what we want. We're not here just to buy a book that's just going to sit still. We want a book that's going to grow. And, I hate to say it, but there's a bunch of brokers out there that have never lived in a soft market. They don't even know what a soft market means. They have no clue. And they're about to learn really quick what a soft market, the pressures that the soft market pushes down on them. And that's going to become the new point of pain for most, right? Is you're seeing it. And then AI threat obviously is something that the publics are still struggling to figure out, like how much erosion will we see from the AI threat? Well, a sloppy app that was thrown up on ChatGPT is just a start.
Yep.
Look, the bottom line is you are going to lose some margin. You are going to lose some control of some business. But what you got to do is you got to understand that it's a seesaw effect on AI is also operational. You can become stronger. You can sell overnight. You can do other things with AI inside your internal organization that not only empower your people to drive a better, bigger culture that they're more responsible in, that they have ownership in, that they like, love, and adore, because they have more meaning in their job. And that's really, we used to call them paper pushers, email pushers, kind of the same thing. Is we've got work processes now that we can drive through AI that can actually drive through a workflow in the middle of the night based on the subject line. We can drive it 75% to fruition, so it delivers into the account manager's desk in the morning, and they can look at it, pick it up, and then drive it the last quarter mile. And to us, that's still having the human element engaged with the power of automation. And it all starts with the basis of having yourself on one system that can drive that forward. That's, and I see a world in 18 to 24, maybe 36 months where the duopoly of kind of two major AMS systems owning the marketplace is going to change significantly, because everyone wants to open source. And if they don't become open source vehicles, people will create it for themselves. And that's going to be the pressure point that gets pushed out on those two companies. And SaaS companies, as you know, they're in trouble. When redemptions are being called, VC money is drying up. People are realizing that the seat model is no longer a valid model. And candidly, we can develop so quick in our internal BI system. We could develop our own open source system within 18 to 24 months, and I think could be powerful. And it's a continuous system that can drive continuity constantly through the process, which you're constantly touching your clients and selling and touching and selling and doing these things without having to put a human body on it, which is a different world to live in than I'm typically, what I grew up in when I was selling insurance, which is really picking up the phone and calling people and sending out some faxes here and there. So I can date myself as much, but I built a $3.5 million book off of working really hard, getting in front of people and seeing people and getting on the road. California, $7 a gallon for gas right now.
Jesus,
where are you going to drive? Where are you going to drive? You're going to drive all over the place. You're going to come down to Orange County as a young producer to try to write a piece of business. It doesn't make financial sense sometimes. You got to kind of, again, I always say build the company to meet the future. And so I'm constantly watching. We've got 22 interns in here right now, and I'm constantly watching how they work. What are they doing with their phones? How are they looking at their phones? What apps are they engaging with? How are they looking at data coming in? And how are we going to evolve to basically meet them at their point? Because that's what we need to do as an industry, not what's traditionally has worked 100 years ago. What's going to happen in the future, and how do we meet that point? And that's, I think, not to get too philosophical, but that's the big challenge in insurance is insurance, especially on the brokerage side, we just move really slow to adapt. And that's why InsurTech became a problem solver instead of a margin eroder, right? That was a shift. Oh God, we're done. I've heard this one.
Not at all, not at all. There is so much to do, so many people. But that's a big difference, right? You have a shift now. There is a replacement element of new technology and how people process and how they buy it or rent it or develop it by themselves. It's the classic build, buy, rent. Now,
Buy
most of the
versus build.
things
Buy versus
you
build is
can
constantly
build.
talked about.
Yep. And, talking about buying or building, you have GCP Capital, you have Apollo S3 in your corner. How is that change your approach or your discipline with the different acquisitions?
Yeah, I think the thing is like, look, in our space, the ones that have had problems typically or having problems there's two things that you look at is overleverage, which means too much debt being pushed into the business and onto the business, which was done during a low interest rate environment where you were basically rewarded to be hyperbolic in growth. And that means by adding a ton of inorganic growth, not really focused on organic growth at all because I don't care back then. Trust me, I was in the meetings and never asked us once what your organic growth was. I told them what it was, but they didn't know what it was. Interest rates buoyed up on those guys and trapped them. And when they trapped them, they couldn't do anything except take these debt instruments into their debt on those companies to keep going, which was they either had to freeze the company where it was at and then it starts to crater, or they put more debt on top of it. And the debt they brought in is called PIK preferreds. Their instruments is set above and beyond every other investment in the company. They're paid first. They strip value from other shareholders. So a lot of these companies did really well getting liquidity into people's hands, and then it stopped. And they can't get liquidity into people's hands anymore. And that's part of why people join these organizations is one is to get to scale, to get more resource, to get a paycheck and de-risk the front side of their business. And the second part is to get basically liquidity drips coming down through recapitalization events that go forward. And so, you've got to be smart about how you manage that. And you got to put yourself in a position where you keep your debt in control. You grow high organically, which then creates more inorganic lift for you actually to buy other agencies. And so the way you look at it is really every dollar you sell that's new organic, that gives you 7 in capacity to buy on the other side. And so it just seesaws back and forth and you're in the middle playing it. So what a lot of these companies got into trouble with on top of that is they went into MBOs or management buyouts. And basically that means that they're in control of everything and there's no private equity group or anybody involved. There's a debt facility that sits behind it, usually operate off a large revolver or whatnot. And if you don't have a grown up in the room, you can it's like an MGA with a pen, and if the MGA that has that pen, that program pen, if they're not in control of what they're going to write and they don't have high discipline in there, they're going to overeat. And when you overeat, you get yourself into trouble. And that's kind of what we see in our space.
Now, it's very remarkable, the M&A machine that you created there in terms of the integration and working with the different partners, we didn't really hit the VCs, especially the ones that now they're in the world of pain because of the high rates. As we can see also, not the PEs, but different companies that have more and more debt and some sort of dilution, or we see all kinds of different combination there. So I don't really want to dive too much into that because that's
pretty complicated and people fall asleep.
It's one of those things. It's complicated, but it's super interesting because most people have no idea what's going on in private companies and how they are being financed. And what does it mean that you have leverage and then, people think, I'm going to take a loan. That will be my leverage. No, yes, but that's one. Then you need more and more, but there is a certain limitation. And then you need to think about who gave you the money and what's going on with them. They have their own investors. They have other responsibilities. They need to show results. They need to show results. Exactly. So nothing at the end of it, it's like,
And by the way, a PIK isn't considered debt. So even when you look at their leverage points that they peg in the print, they'll say they're at 7 when they're really at 10 because they got a bunch of picks in their stack that aren't being considered a debt instrument. It's not a true debt instrument. And so they're not even given a true picture into actually what leverage is on top of that company. And, when you get into some erratic macro times like we're in, that can be problematic again. And so the key is, and again, it's like everybody knows this and they all understand it. It's reoccurring revenue with zero capex. That's our business, right? If you don't understand that you can't overstack debt on the company, you can grow the company really heavily at an organic clip if you put the effort there. And when you're growing at organic, that's your free growth. That's where you want to grow. Organic is everything. It's the lifeblood of the agency. The agency is a car. The organic is really your fuel, right? The debt can become fuel, but it can be tricky, and you've got to be very cautious about how you put that on the company. And so, yeah, we take debt out too, but we keep it at a super reasonable incurrence and leverage position. We don't have any picks. We're clean. We're one common share across the entire organization. So like when people start to think about how they look at their partners or who they may partner with, they got to think about this stuff. It's like, is there only one share or is there 50 shares, different classes of shares? Because that's a difference, because it's called waterfalling, right? Like the results will waterfall down, which dilutes your return. So you got to think about it and like what kind of debt, what's their debt look like? And I hate to say it, a lot of agency owners, they do broker math and they just think about, hey, what's on the front for me? And that's what I'm going to take. And the rest is kind of whatever. And then they get mad when they go 8 years into an organization, they're not getting anything out the backside. And then they get upset. And it's like, well, yeah, I mean, I get it. I'd be upset too. But the fact is the company is over leveraged. And if they're going to take the company public or they're going to do something different with the company to get your money out, there's going to be big changes coming your way that you're not expecting. And you better be accepting to those changes, right? And that's, I think, where we've been more steadfast on the front side. And a lot of that, I think, has been given and driven primarily because of coming out in 2020. We had intent behind everything. We anchor everybody to why we're doing what we're doing. We don't sit around and try to BS or blow smoke at people. We're like, this is what's going to change about your business. A lot of big companies do that too. Don't get me wrong. There's a lot of great companies out there that do that. And they say, here's your expectation set. But there's a lot in the middle that just kind of leave it
vague,
open. Yeah, very vague. And look, here's the thing, man. Culture, I mean, the thing is, like, you always look at, like, economics are there for everybody. Like, the economics are the economics, right? I mean, it doesn't matter. If you want to sell your business, someone will buy it. The question is, who are you going to put, where are you going to put? You got to figure out when you're going to enter that company. Where are they at in their life cycle, right? Because anybody that's $1 billion plus in revenue, they're coming to a reckoning point where they got to figure out real quickly, are they going to turn towards the public markets, or are they going to sell to a strategic? Are they going to merge with someone and then go public? But you can't, there's no private equity there's basically like 3 in the world that want to put $1 in up at that level. And, it really becomes a challenge. Why? Because they've got returns, like you said, to their investors that they've got to hurdle over. And if they can't get there, then your pool dries up and then your choices are very limited. And then it's like, that's when the Gallaghers and the publicly traded come marching, and they come in and they say, we'll take you down because we're the only ones that can buy you, and that's that's a big issue. And it's one of the things that, like, and those are all fantastic companies, but I could have sold my company to them 100 years ago and been done with that. Right. Like I'm building Alkeme to be Alkeme. I'm not building it to sell to a publicly traded company or to strategics.
But listen, that's great. And that's actually a great segue to a different topic. Because one of the challenges that we see, it's all those InsurTech startups that are kind of stuck. They can't pass the 2 million or the 5 million in revenue. Well, if they were, especially if they are on the premium, and 2 million if they are just trying to sell services or technology, each one of them is stuck. It's not good enough. It's almost good for the PE, but then for VCs, it's really bad, because at this point they are like 6, 7, 8 years in. The VC is going like, well, we used to have a fund that was 8 years, now it's 10 years, now it's actually 12 years, if not more. They don't know, then they have the extra, the 2 years extension.
You have a down round, one down round and you're toast.
Yes,
you have one down, one raise down and you're toast.
And then you can talk about the difference between the different classes of shares and the kind of dilution, but it's actually down round. there are all kinds of permutations in that space, which is super painful. So kind of like having that negative vibe,
Hey,
if you
they
like.
don't have those $30 million homes in Park City, because they're genuine. They're looking out for your return. They want you to have a return, but they want their return first, and that's something you got to be cognizant about. It's like, look, I think you got to think of the shark that kind of swims, and you got the pilot fish or whatever they
Yep.
call them that kind of underneath them, right? I mean, that's kind of the
Mm-hmm.
big monster that goes to the water. Private equity is not a monster, nor is VC. They're guys that facilitate
Yep.
action. They facilitate growth, right?
Yes,
They
they are.
expect you to do a certain amount of things to return them their expectation, and then they're glad to share it with you.
Most
But you got to
definitely.
hit their expectation. And then there's plenty of people that get super wealthy in some of these companies, and they hit the right time. It's a lot of it's timing, as you know. I mean, we've
It's all
seen.
about timing, and at the end of the day, you need to have a return. You need to sell your company so they will have the return, so their LPs will get the return, and everyone will be happy. But for this very, very, very long prelogue, it's a question of, okay, so we have all of this stuff, all these different entities, etc. Are you an InsurTech, or are you an old school brokerage that is doing leverage buyouts and then injecting in a PE style your technology and integration playbook?
Yeah, no. So I would say that we're definitely. I wouldn't say it's an InsurTech because that's not a straightforward InsurTech play like that. But we're AI powered, AI driven, people powered solution. So like literally in the middle, you still got your people
I
working
love
on your middle
it.
market
That's a
stuff,
great
but you're
slogan.
really hitting hard with the technology on the lower levels, the stuff that you cannot touch, the stuff that you lose money on. You've got to make people's jobs better, more meaningful, more fulfilling. I mean, I see a world literally where you're going to see two kids that come up with an idea to start a brokerage in a basement, and they can create a $5 to $8 million revenue book and have zero employees. They literally will have bots that can run the service models behind it and sell for them 24/7. That's the future. That's what's going to happen. And so that'll be some of the market will obviously drift that way. The middle market, there's more of I need a throat to choke kind of thing. So they want people, eyeballs, all that. So the question is, how do you take an amalgamation of both of those and mix it into a concoction and make it the right one? And so our goal is always to say, like, we want to use AI to empower our workforce to be better at what they do so that our consumers have a better journey with us, which lifts retention, which drives, culture, which drives your people to be happier. When your people are happier, you're going to be more profitable. There's direct correlation between the two. And so it's like, look, again, it's here to stay, and it's adopting faster and faster as every day goes by. And so if you're not paying attention to it, you're going to be rendered useless at some point. I hate to say it that if you're not thinking about it in some form or fashion, or you're just not going to grow. And if you're okay not growing, that's okay. I'm not here to tell anybody what to do. I embrace the entrepreneur spirit, man. I've started and sold businesses. That broker you talked about was a matchmaking tool that we came up that delivers leads into people's inboxes
Mm-hmm.
for them digitally. And, so I'm always thinking about, like, and part of it's my ADHD, but I'm always thinking about things, but I'm always thinking about the next big solution, right? So it's like, what do I think can work really well inside the business? And you got to MVP sprint that. You got to see if it's an actual idea that's got legs, or you got to commute it and say, we're done. We can't do it. It's not going anywhere. And you got to be quick with those decisions in today's market. Like, buying patterns are changing. We're seeing that the lifespan of a policy in control at a brokerage is changing, and I tell young producers all the time, I'm like, look, if you want to be a producer of this business, how you get your business is how you're going to lose your business. So if you're going to compete on price, you're going to lose on price. If you're going to take it on a BOVAR, you're going to lose it on a BOVAR, right? If you're going to get someone that calls you and dials in or comes through a digital lead, you're probably going to lose it that same exact way, because that's the type of shopper they are. And that's their shopping tendencies. Unfortunately, like back when my dad started in the business in 1972, it's like they would keep clients. He had clients for 35 years when he retired. I mean, they stuck with them through thick and thin, no matter what. I don't know how much of that's left. I hope a lot, but I mean, we've got a lot of long tenured clients too. But you got to figure out how to optimize the lower level premium accounts, but still give them the service they deserve without touching it. Second, you start to touch it, you start to lose money as an organization.
But that's so
And then you
smart.
got to
Yep.
constantly reinvest. So we've gone into every agency we bought. We've rank filed their book of business. We've literally decile ranked them on their own algorithm based on their own specific uh, you know, utilities that they have inside their business. And we basically show them the 80-20 rule literally in front of their face and say, look at what's occurring inside your own book. And it's okay because every book's built that way. Because you always start off writing everything, and then you get better at what you do, and you get stronger at what you do, and then you focus more heavily in one sector, and that's really where your growth takes off in an organization. So we really look for niche players. We want to buy agencies that do something specific, that add value, that then we can drive across our entire network and self-select and self-serve internally by helping our partners grow, and they're helping us grow at the same time. And so when you go to dinner and you're like, hey, your friend says, I got this weird deal where I'm building 3 hotels, and normally you'd be like, I don't do hotels. Now you can just go on our system like ChatGPT, query it, and it'll tell you who writes hotels, what the carriers that wrote that hotels, what the last rating structure looked like, I'll even create emails to introduce yourself to the broker that actually specializes in it. It'll actually put you in contact with them. And that's where the future kind of lies, is at the intersection of data and decision making is going to collide in those type of environments. So our whole system's being built really as a prompt-based system. And so when you overlay everything, at the end of the day, we're an Epic applied user, but that's where all of our agencies rotate into. But really over the top, we're layering it with a chat-based kind of open system that we can actually query anything, and it will take you there.
I love it, because basically now you answered most of my questions regarding the future of the industry, where it's going in terms of the M&A.
Man,
How do we cater for the small premium policies that agents don't really like to spend time on the small? How do you manage the book of businesses when you acquire them? There are so many small things that when you go in, you need to deal with so many details and think about where things are going and how AI is going to shift everything. And do we need to be scared? Is there a difference between this disruption versus the other? But
I think you should be scared as a business owner of AI. I think what we should be scared of as society of AI is that, unemployment's going to spike. And what is that going to do? Because you don't have what we're trying to figure out right now. And we're work with a bunch of colleges, and we're highly tied into their business schools. You have to take that when a kid came out of college and they entered the workforce, they entered at a certain level, right? This is where they connected. You need to learn how to connect them up here now, because this is gone. This just disappeared because cloud can do it all.
yes and no.
And so
Actually,
my thing is like, we talk to the deans of the students and we say, instead of hitting your kids for using AI, empower them to use it correctly and make them force multipliers. And so that's that way we tackle it internally, is like, look, we look at it as a force multiplication tool. If I'm Curtis and I can do so much in a day, imagine if I have AI properly harnessed to my ability, then I can do 12x of what I could normally do in a day. That's the way I look at it, is a force multiplier. And to me, that's really something that these kids, and I tell my son works on our BI team. He's interned, like my 21-year-old goes to University of Utah, and literally he's been with our BI team for like the last 3 years, and he uses it at school. He uses it here at work. He's getting real good with it, and he's going to use it to sell, and he's going to use it to do other things. And so the more we can train them up to attach at a higher level, utilizing those tools instead of being scared of them, which these kids aren't, that's the main thing. It's like, if you think that the business is not going to change going forward, and this hasn't, Anthropic just came out today and said 90% of their code is being written by their own agents.
well, listen, every day they come out.
90% of their code is being written internally by their own agents without any human intervention. If you just take a step back from that, that's wild.
So that's a different conversation. It's not that different.
It all collides.
Here's my take on that, because Anthropic, that's their job, and they need to eat their own dog food. But when we're looking at other software companies, and we hear about all the different firing and improvement and efficiency, we don't know who they fired. But the other thing is, and that's kind of a deeper conversation that I had.
98% of the time is to say, hey, we got so great with our technology that we let a bunch of people go, which is, I think, true in some cases. But I think in other cases, Salesforce, let's just say,
Did they
I
let
think they just let them
developers
go, and they
or
figured.
just like
I think they just figure it out.
Yes, and then they might have hired other people with less money. At the end of the day, before all this AI, we used to talk about you have like the great develop. So you have like, it's a long tail, right? You have the majority of the developers who are punching code or code monkeys, as we used to call them. Then you have like the senior ones, and then you have like the alpha, the 10x unicorn software engineers. That's so hard to get them. What happened now with AI and Claude or Claude Code, etc., you basically took the entire long tail and kind of shifted it up. You added this extra oomph to it, that you have more and more people getting into the alpha, to the 10x engineers. You still have jump, right? Absolutely. If I need to write code nowadays, instead of Googling it and checking on a Stack Overflow, I'll use Cloud Code and with the anti-gravity from Google. But luckily for us, I don't need to write code for a living anymore. But going back to our stuff, because this conversation was great, and we are much after the planned time. Let me ask you the last question that I'm asking most people, but we'll focus on your space. What's the one thing that people should be talking about when it comes to organic growth versus, well, rollups? And what does it tell about the direct carriers?
I mean, at the end of the day, I mean, you can't, if you're not growing organically, you can't even be in the M&A game. You just can't. And I think that the problem that people are going to face and companies are going to face is that if they haven't had a plan to grow their business in multiple directions, they were counting on rate to lift them, and rate was lifting them for a while. And like when you see the publics coming out and saying that they're 11% organic growth, I mean, I've been in this business long enough to know that never existed. Like 3% organic,
Yeah.
and it's
That's
usually and it's usually trading teams. It was like this team goes here and this team goes here. Now what the minds of the industry have done now is they've gone to producer poaching. And what they're doing is they're basically putting mirage effect on organic growth by bringing producers in, and they're actually counting. You're a producer and you say you got a $3 million book, and I hire you, even though you haven't moved the $3 million to me, I'm counting that as organic growth. And so a lot of these companies come out and they say, we're at 16% organic growth, or we're at 18% organic growth. It's like the business hasn't even moved. So that's why now we've entered what I call the NIL of the insurance producer world, which is, from like you're seeing in sports, where like there's a few companies out there, I won't name who they are, dang well who they are. They're going out and they're trying to poach 20, 30, 40 producers from every agency, and they're throwing a ton of money at them, and they're putting them on a 5-year contract. And at the end of that 5-year, that producer is going to do the exact same thing again. They're going to put their hand back out and say, what are you going to give me, or where am I going to go? And it's kind of like the NIL, and I see it with like basketball and stuff. It's like you have to buy your players, right? Now you have to buy your players. And so the economics play much cheaper to go buy a producer at a heavy cost, because it doesn't come with all the historical baggage of a true agency. It doesn't come with a lease, doesn't come with employees, a system that's not great, data that's not great. It's basically you get the production, you get the revenue. And so that's another thing that we have to plan for, is like, what does the newly evolved producer look like? And I think that there's going to be an evolution in what a true producer's thought about. I think you're going to see high-powered account executives that handle massive blocks of business using agents around them to support them. and that's where I think you're going to see things move to. But, I'm not these are just my thoughts, and like
That's
how
the
I
idea.
think about the business. It's an idea. And I think that that's where it goes. I'm not saying that's where we're going per se, but I think that's where we're all going to drift naturally, because that's where we're going to be forced to drift because of all these issues that you've seen that we are all coming across.
Well, I tell you,
AI is
mhm,
interesting, man. Again, I'm 53, so I'm a little bit long in the tooth, but I know just enough. And I'm Gen X, so I'm like capable with technology, but I'm also still a people person. So you got to figure out how the future looks, and that's going to be tricky for a lot. I think, especially a lot of the guys that are in their 60s and 70s that run these companies, and they're like, no, this worked all the time. We're still going to run this way. This is the way it works. And yeah, we'll dabble in AI, and that'll be cute on the side, or we'll dabble in InsurTech, or we'll buy it. You know, I've met with a couple of the biggest leaders of some of the biggest companies. They just said, we'll just wait till something develops and then we'll just go buy it.
that's also a philosophy, and we've seen them all doing all the different direction. No, that's great. And and remember, people are listening to they are here to listen to your opinion, no, not to my opinion. They have my opinion enough. But anyway, Curtis, thank you very much for joining me today. If anyone wants to reach out and get in contact, how they can reach you and what they should talk with you about?
Yeah, I mean, my best bet is I always tell people, follow us on LinkedIn. If you see something you like and you're interested in who we are, what we're about, you like our culture, hit me on LinkedIn, try to connect in with me, send me a message. That's easiest, most basic way. You can hit our website. You can put your stuff in there too as well. And someone will get back to you. But I mean, at the end of the day, again, it's like, this is such a great business. And I know that it's going to survive and it's going to thrive, and it's just going to evolve to a different look and a different level. And my goal here, like what I do every day, like I don't have to work. I love to work. And that's a big difference maker. I'm not here for the money. And I know that sounds like a cliche, but it's the truth. And I'm here to change the industry, and I want to make it different. I want to make it different in a good way. And I want to give kids what I had, which is a pathway into a business that gives you flexibility to have kids, be a participant in their life, have a life that's outside of just your normal, hey, business is business, man. I went to every one of my kids' sporting events. We had great vacations. It gives you flexibility. Like, I mean, listen, this is the future, right? And this is what we get into the business for. So, I want to encourage more kids to look at the insurance business not as what they think it is, like a used car salesman type thing. I want them to see that there's sophistication levels that are in there that are way broader than they could ever imagine, and open up their mind to the possibility of what could be. And that's why we're in all these different business schools teaching and talking about it openly. So
Wonderful. Curtis, thank you very much. It was a pleasure
I
chatting with you.
appreciate